Hi again, this is Rick with AmazingAccuracy.com, and today is March 25th, 2014. It's currently 4 o'clock p.m. Chicago time. Okay, we're going to be taking a look at the Canadian dollar futures. Now, if you trade the Forex, remember that the futures of the Canadian dollar moves in the exact opposite direction as the USD CAD Forex pair, because in the Forex, the USD is listed first in that pair, whereas in the futures, the foreign currency, well, it's foreign to me because I'm in the US. The Canadian dollar, for example, would be listed before the US dollar because the futures chart is based against the US dollar price. So these are Canadian dollar prices that we see on the futures chart. But in the Forex, you're looking at US dollar prices. Okay, let's get on with it then. I got a lot of information to give you, so I'm going to have to really talk fast and try to cover as much as I can. We're looking at a monthly chart right now, and as you can see that since January, prices have been bouncing around the 50% retracement area, going all the way back to March 2009 to July of 2011. It has traced about 50%, exactly 50% come the last week of January 2014. February was a bullish month, barely. As you can see, it's blue. And then this month, March, has dipped a little bit below January. Now, I made an indication here. I wrote April, and I got April and May. And the reason I wrote this is because historically, a high percentage of the time, both April and May have formed swings, monthly swings. This is a monthly chart, so each price bar represents a month. So, what's a swing? If you haven't been watching my previous videos, shame. Let me quickly explain a swing. Here's a swing where you have a new higher high, and then prices move below its low, confirm that as a swing top. Here you have a new lower low, and then prices eventually make a higher high, as you can see here, confirming that as a swing bottom. Okay, now you'll notice in this case here, we have a swing top immediately followed by a swing bottom. That's a correction in a bullish trend here. Okay, this is called a correction. Well, it happened again. For example, let's see, we have, where's another one here? Well, here's one, this one right here. Here you have a top followed by a swing bottom. Top followed by a swing bottom. Here you have a top, okay, it's a little higher than here, and then followed by this low, and then prices went up again, making that a swing bottom. You have top and a bottom, and then you have another top, and then prices go all the way down. Here's the bottom, blah, blah. Okay, hopefully you know what that is. Now, April, May have often made this kind of pattern where one would be one kind of swing and the other month would be the exact opposite swing. So if April, for example, was to make a lower low, then I would expect that, for example, to become a monthly swing bottom, because I would expect in May to make a higher high, but then again prices following May going low again to make that a swing top. So you'd have bottom, top, and things would continue lower. On the other hand, if prices were to make actually a higher high in April and then move down in May, that would confirm April as a swing top, and then I would be looking for May to likely make a monthly swing bottom. Now, this has happened a great many times over the years, but it doesn't have to happen every single year. So just keep that in mind. But I always look at probability, and it's been very high that has happened often. But what I will tell you, though, is at this time, whether April makes it first or May makes it first, I don't care. April, May, whichever one makes that low, I am going to be looking at that as a serious monthly bottom low in this market, because of what we're going to be taking a look at next. And that is, we're going to be taking a look at the weekly price chart. Now, I have put two indicators on here, a MACD, and I've also placed on here an ADX. If you're not familiar with these indicators, I would highly recommend that you do some research on that, Bing it, Google it, whatever, and get familiar with them. They're very good indicators to use, along with cycle turn dates, which are my F dates, for example. So let me just explain what I'm seeing here. Here you have weekly price bars. Each price bar represents a whole complete trading week. That's 5 trading days each. And as you can see here, that prices dropped until it reached this bottom low here in January a week ending January 31st. That was the last week of January. And we saw on the monthly chart how that hit the 50% support line, and then February prices were overall bullish, but then in March again it's resumed the bearishness. Okay, and it's moved a little bit lower than January, if you recall that monthly chart. But notice what happened here from January 31st as prices started to move up here. Now notice on the MACD, these red vertical lines, which is called a histogram, is a good indication of momentum, and momentum was really good on the downside here, and you can see then it started to wane since then and continues to wane even though prices moved lower. This here is an indication of a weakening of the bear trend. But if we look at the ADX down here, when this ADX line is moving up, okay, that means that whatever trend is in effect right now, and you can tell what trend it is, you can either look at the chart and it's kind of going down, right? Or just kind of look at these DI lines here, and the negative DI line is the red one, is above the blue, which means we're in a bearish market direction here. So if the red's above the blue and this black line here, which is ADX, is moving up, that means that that red is in control and it has got good strength on the downside, and it is still moving up. But you can see it's at an extreme level here, and it's at an extreme level here at the same time that the MACD is showing that we're losing momentum. And you can also see that the DI negative line here, which is the red line, is also moving lower. So although the trend is still intact, it's losing its mojo. And on the downside here, we need to start looking for a bottom in the weekly chart here really soon, because this is about ready to cross above the zero line, which means that the signal line is about ready to cross above the oscillator line on the MACD. It's going from this sideways thing here to up. And another thing you need to note here is that while weekly prices have dipped a little lower than it did back in January 31st, the MACD did not. It has been flatlined. So this moves a little lower, this does not. Bullish divergence, okay, is a early warning signal that this market is likely to start turning bullish any time now. You can also see these red diamonds here. If you watch my previous videos, you know that those are my F dates plotted on my chart. They're cycle turns calculated based on geometric mathematics and cycle extraction algorithms that I use. And it has told us that we should expect some sort of a weekly swing here. Well, it's an outside bar. Notice higher high, lower low. So we know it's going to be a swing. Outside bars almost always become swings unless followed by another outside bar. So we know that's going to confirm. We know that that's good. The only problem with outside bars is it's omnidirectional. I kind of made that up. Anyway, basically what that means, though, is that because it's got a higher high and a lower low, it can make either a swing top or swing bottom. It kind of makes it a little confusing as to which way it's going to go, as opposed to something like this price bar. A lower low price bar, when it moves into our little red diamond area, which it did back here, is easy to tell, oh, we're going to make a bottom here, so we can get ready to be bullish if we want. And here it was easy to tell it was going to be a top. But these outside bars, they're a real bear, no pun intended, that sometimes you just don't know what way prices will move after them, so you actually have to wait until they confirm before you start getting real heavy in one direction or another. I hope that makes sense. Okay. So as prices are moving lower, losing momentum here, ADX is showing that it's still in a good bear trend, but it is nearing its end as the DI negative line is moving lower here. We need to start looking for a weekly swing bottom to likely form. It could form here. I would prefer that it would form here because this is an indication that, you know, I put the major swing turns there where I'm expecting, and this time area here without an inversion would be down, would be the bottom. Okay, and if it was around this time period here, this would correlate wonderfully with April being the bottom for the market. But then, hey, you know, I'll take what I can get. So you can see we're expecting weekly swing bottom here. We've already saw the monthly chart supporting this. Now let's go to the daily chart. All right, more indications, lots more confusing stuff to look for. Actually, it's real easy once you do it enough times. But let's go back to January 31st. Now, this is a daily chart, so each day is a day. And you can see here that January 31st that it made a cycle bottom and it started moving up, and we were expecting that, and it happened, and that was a wonderful time. Now over here, if you'll notice that the MACD, again, you notice the prices are moving lower, but yet the MACD started showing that it was losing steam on the downside. See, just like the weekly chart is showing now. And at the same time, you can see that this started to cross up, and that's when everything goes nice and green, bullish. Okay, so we know at this time here that we were close to potentially moving up. Now you got to be careful. Don't look at this as the Holy Grail, because it's not. Many times you can go all the way up to the zero line, then bounce all the way back down again. So some novices will often get themselves snagged with that. Be careful. You got to use that in conjunction with other things. And I did. For example, here we got the ADX again on the daily chart, and you'll notice that while the prices were dropping, the line was moving up, saying that the bear trend was intact. And you can see that the red is above the blue, showing that it is indeed a bear. And then it came up to this point here as it was losing momentum, about ready to cross up above the zero line on the MACD. Notice the ADX started to turn down, saying the trend is over for this time period. Okay, moving down doesn't tell us anything. It just means that we're not in a trend. It's when it's moving up that we're in a strong trend. I shouldn't say isn't in a trend. I should say just not in a strong trend. Okay, and as you can see here, prices pretty much move sideways. And as we saw on the weekly and the monthly chart, that the month of February was mostly bullish overall, but then we're now back into kind of a mild bearish tone for March. Okay, so this was really good for this, but hey, look at this. Prices did move lower here 3 days ago in the Canadian dollar futures. It moved lower than it did back here in January, but notice here where the two lines are in the MACD. Notice how it's much higher up here, although prices are lower than here. Bullish divergence again, my friends. Okay, are you starting to see this picture here? You're starting to see that the monthly is now at a major support area. You saw the weekly is due now for a weekly swing bottom, and then you can see on the daily chart that we're now coming to a time period here where we should be looking for a significant trend change in the Canadian dollar to the upside, because we're already in a bullish divergence situation here. It already pegged the bear as kind of ending back here on the daily time frame, by the way. The bear ending on the daily is not the same as the bear ending on the weekly. Okay, it's all different time frames. But fortunately for us, the bear is ending on the weekly as well, and while it may or may not be on the monthly, we don't care. That's a very large time frame, and it could be months before it starts to resume its downward thing again, so we don't care. Okay. Whew. Okay, let's see. Right now, as we're coming up off this F date here. It was 1 day early that we had this swing bottom here. Prices rallied up, and today it moved up higher too, but I don't download my prices for this particular end of day chart until this evening, but I can tell you by looking at my TradeStation that prices have moved higher here. I just plugged TradeStation. They should send me royalties, but that's not likely going to happen. Anyway, so prices are rising into this current turn date period, which is March 26th. So I would expect the swing top to form here and then prices to start declining again, which is good, because then we move into this area here. There's no red diamond here because the report hasn't been released yet until this weekend. That will give these future weeks, this future week, the daily turns. But I got it on the chart here, so freebie. So you can see here I have different techniques that give me these values, showing me this clustering going on here, and I know that during week ending 4/4, very strong time period for a cycle turn, and I'm guesstimating that it would be a bottom since they tend to cycle most of the time. You can see here, and then now it's coming lower. So I'm looking for that bottoming around here. You notice I got week ending 4/4 is important. I put that on there a long time ago. And look at that. Everything is now coming to a head. This is why I'm making this video, so that my viewers will know this in advance, that come as we go into April here, the first few days, we want to be looking for that bottom on the daily, the weekly, and potentially the monthly price chart in the Canadian dollar. Very significant time period for the Canadian dollar. Time for the loonie to gain a little more value against the US dollar. It's the way of the world. Anyway, thanks for watching this video. If you haven't done so already, please subscribe so that you receive these on a timely basis, because it's a lot better to get it now than after April 4th, right? Okay. And I got a free newsletter. If you would like to subscribe to that, just go to AmazingAccuracy.com, and I'll see you in the next video. Thanks for watching.